Good morning, everyone. This is your Market in Minutes report, and we are looking back on last week, of course, which was February 5th through the 9th. Hope you guys are recovering from any Super Bowl watch parties. It was a good game, but let's get right into it because last week was a great week. Actually, seeing some milestones for the S&P 500. We'll talk a little bit more about that, but let's jump into it and see what occurred last week. As we look at the 5-day performance, we have Dow Jones roughly flat, but as you'll see, the broad markets were up really nicely. S&P up 1.4, Russell 2000, the small cap index, up 2.4, which is really great to see. NASDAQ up 2.34 continues. Tech just continues to scream higher. And the foreign developed stocks were up just a smidge. So let's take a look as we back up to look at the broader picture here. Year-to-date performance. Dow Jones, 2.74, still very strong. S&P 500, 5.52, extremely strong. Russell 2000, trying to get out of the doldrums there. NASDAQ up almost 7% at this point. Again, incredible. And MSCI EFA, which is the foreign developed market, still down a little bit, so struggling a little bit. But across the board, just really stellar performance. And of course, we'll talk more about the S&P hitting that milestone, but really nice to see. Rates. So these were relatively unchanged. We did see a slight tick up in rates, nothing major, but did see an increase there. Wasn't enough to really sway the market one way or the other necessarily, but rates were pretty stable. So as we get into the actual news behind it, the S&P 500 tops 5,000 for the first time, so a nice milestone there. At the start of the week, stocks faced pressure due to comments by Fed Chair Powell over the weekend, signaling the Fed has no immediate plans to initiate rate cuts. We talked a little bit about this last week, actually over the last several weeks. Of course, it's to be expected. He's not going to be overly expressive here about when they're going to cut rates. They want to be very cautious, and I think that's the continued approach here. Doesn't mean they're not going to cut rates. I think the consensus is they absolutely will. It's just a matter of when, but it might be a little slower than the market initially anticipated, but no big deal. Consequently, the yield on the 2-year U.S. Treasury note, highly influenced by monetary policy, increased to its highest level in 2 months. By the end of trading on Monday, stocks had regained a significant portion of their previous losses, and influencing this market rally were positive corporate earnings reports. Really great earnings. A lot of the companies have already reported, and we'll talk more about that right here. This trend continued throughout the week, contributing to the overall market momentum. By Friday, so this is that 2/3 of the companies listed in the S&P 500 have released their Q4 results. And an impressive 77% of those companies exceeded earnings expectations. So earnings season has been a blowout success, which is great. Overwhelmingly exceeding expectations. So all good there. Investors expressed enthusiasm on Friday after a report indicating December's inflation was lower than initially anticipated. And this positive news, revitalizing buying activity, resulted in the S&P surpassing 5,000 for the very first time. So all really good news there. And we are seeing continued economic strength. Again, very, very positive news here. The strength of the U.S. economy has come into the spotlight. The analysis conducted by the Wall Street Journal recently proposed that the economy's resilience could be attributed to, at least in part, due to the productivity driven by the technology sector. We continue to see tech just explode and surpass all expectations, defying really consensus that they may see a pullback thus far. And they still might, but they've been a real bright spot here. What might rein in that productivity? Well, one possible influence could be the increase in oil prices witnessed last week. Additionally, shipping companies have been imposing surcharges for several months to mitigate recent conflict, and these charges may contribute to global inflation this year, potentially dampening investor enthusiasm. So we shall see. Again, these are just in theory, hypothetical scenarios that may put some pressure on enthusiasm, but remains to be seen. Overall, still very strong start to the year, and the stock market, of course, global stock markets continue to just scream higher, and companies reporting earnings thus far has been really, really positive. So all good news there. So what's on deck for this week? So we have some key economic data, of course. Tuesday, CPI report. Wednesday, EIA petroleum report. And Thursday, industrial production, retail sales, and jobless claims. Friday, housing starts, producer price index, and consumer sentiment. So quite a bit going on this week. Not jam-packed, but enough to keep tabs on. Companies reporting earnings. Again, the lion's share of companies have already reported, but we are still seeing some on the tail end of this season trickle in. So Monday, or today I should say, Arista Networks, Waste Management. Tuesday is Coca-Cola, Shopify, Airbnb, and Moody's. Wednesday, Cisco, Sony, Kraft Heinz. And Thursday, Applied Materials and Deere & Company. So that'll round out what we'll be taking a look at this week. And again, as always, we'll report back to you next week on our findings throughout this week. So, guys, thanks so much for tuning in. And again, as always, contact us if you want to talk about your financial situation, any investing questions or needs you may have. We're always here for you, whether you're a client or maybe looking to get started with a financial advisory firm. We are an open door, so give us a ring or contact us through any of these methods. Also, subscribe to the YouTube channel if you haven't. We'd love to have you as a viewer. We release videos on a pretty regular basis covering market reports, investment topics, and financial planning tips. So yeah, give us a look. Thanks, guys. We'll talk to you next week.